Yo, yo, what's up, everybody? How we doing? Listen, folks, we will be starting here in about 10 minutes, okay? Just doing a quick mic check. Mr. Don, Mr. Don, can you hear me? Is the audio good? I'm just doing a quick mic check on this side. We'll be starting in about 10 minutes, folks. I just need to check this. Audio is good? Perfect. All right, folks. Just get ready. We got a packed session with Matt Maley, Chief Market Strategist. All right, Mr. Betch, Mr. Don, we'll see you guys in a few. All right, everybody, welcome to the session here. My name's Rodrigo. I'm going to be here with Matt Maley, Chief Market Strategist at Miller Tabak and lead trader at the Stock Picks Inner Circle chat room. So before we do get started, everybody here, I'm excited for today's seminar. We do have, and also for the material that we will be sharing with all of you guys. A big shout out. We do have Balogun. We got Mr. Don Hickley in the house. What's going on? All right, so we have a packed house here for today. This week, all right, this week, as usual, we will be going over information inside Matt Maley's live room, and we will be giving you guys a sneak peek into the magic and how it happens. We will be going over some trade ideas, some strategies for volatile markets. Matt Maley's 40 years of experience in Wall Street, right? We'll be talking about markets overall, sectors, and by the end of this session, you will have a much better understanding of the current market environment and what you need to take it to the next level, right? And we do have some folks out there on the other side. Mr. Jim Cruz, what's going on, man? Good to see you again here. So let's see. All right, so stick around, folks, until the end. We do have a live Q&A of the chat room. So we'll typically do this live, but since COVID, we've been doing it virtual. It works out better for everybody. So let's go ahead and bring on the man of the hour. I believe we do have Mr. Matt Maley in the back. Let's go ahead and bring him on. All right, Mr. Matt. I think we have him there, right?
Okay, can you see me now? Are we here?
Yeah, what's up, man? How you doing, Mr.
Okay,
Matt?
good. Sorry, it was I was trying to join and the thing kept coming back saying like I was unable to join, whatever. So probably something on my end. Sorry about that.
Yeah, no worries. So folks in the chat, all right, if this is your first time here, put a one in the chat. If you've been here before, put a 2 in the chat so that we know how to, take the conversation, because we will be covering everything from basics with Matt Maley on options, even strategies that he's been using. Matt Maley, you've been trading for 40 years. You have an extensive background. For the people that maybe here are just tuning in for the first time, if you could give us a brief introduction of your extensive resume in Wall Street.
Sure, Rodrigo. Some of you may have seen me on TV. I've been on CNBC, Bloomberg TV, TD Ameritrade. In fact, I think I was on all three of those just this last week. But I've been in the business a long time, as Rodrigo pointed out, and somebody told me once I've been on CNBC over 600 times. But the point is, my background is a lot more unique than I think a lot of other strategists on Wall Street, because I was a former trader. I spent 25 years trading for two of the biggest and most important trading firms on Wall Street. One was Salomon Brothers, which in the last part of the last century, in the 1970s, 1980s, 1990s, was the most powerful trading desk on Wall Street. I wasn't there for all that time. I was there for 15 years though in the 80s and 90s. And then spent 10 years on the Merrill Lynch trading desk, which was the biggest trading desk and one of the most powerful. And what I did at the time is I covered the trading desks of the biggest institutions in the world, the very biggest mutual fund, Fidelity, the very biggest hedge fund, BlackRock, insurance companies, banks, et cetera, and really learned about what's going on for the more active traders. I mean, we all have a long-term, a bucket of investments or a portfolio that has long-term investments that are 3, 5, 10, even 20 years with that kind of hindsight. That kind of forward view. But for those of us who like to be a little more active trading, maybe it's a smaller bucket, maybe not. But looking at more what's going to happen over the next couple of days, maybe in the next couple of hours, but certainly the next couple of weeks, next couple of months. And when you talk about that, a lot of these other strategists who had spent most of their career as analysts or as economists, I mean, they're talking about theoretical stuff and how things will play out in the long run. And that's fine for that long-term investing. But for those who want to be more active traders and really want to really expand about and maximize their returns with a bucket of money that they use for trading, that doesn't really work out as well. Because as I've always said, kind of my old saying, or the saying that I've always followed, that I made up, was, the market is not always right, despite what they tell you on in the financial news, that the market's always right. No, the market is only always right eventually, and we see the markets get way out of whack, and that's where where my trading background really comes in to help, and it helps whether it be we trading these options or individual stock picks as well. It can be, I mean, that's what you look to do for if the market was always right. You just might as well just put your money in an index fund and just let it sit there, and that's fine. Obviously, the people who did that last year got killed, and how about we in the chat room that we use did very well, profited very, very nicely last year, had a nice up year. I mean, some people did well because they lost less money. We made money, and that's really what we're trying to do. Was the market right at the top in 2020, just before the pandemic blew up? Of course not. Was the market right at the bottom in 2009 of the financial crisis? Of course not. And so we try to find those areas that really can, and I guess I'll leave it with this last little comment about my background is that Warren Buffett became a billionaire by taking advantage of the situations when the market became what was wrong, and when stocks got blown out and were completely washed out, he would swoop in and pick up stocks at incredibly low prices, and that's what we're looking to do. Of course, with us, we could also get some on high prices, and with today's tools, it's much easier to do that because we have weekly options, we have ETFs, we have inverse ETFs, we have leveraged ETFs, et cetera. And we could take advantage of and profit in both directions when the market is trading. And like I said, that's what we did last year when, even though the market was getting hit, we did very, very well.
Right. So we did a quick poll here, Matt, on what everybody's here goal basically is for trading. So for the most part, people are looking here to generate cash flow, right? And I know that you do have, well, you've been working on your strategy trading for 40 years, and you're able to generate cash flow with these ideas where you're with the members throughout the whole day, right? And you're buying calls, you're buying puts. Can you explain a little bit more about how you're able to do this and how you've been able to do this for 40 years now?
Yeah, the thing is again, you're looking for situations where, again, the long-term growth, retirement, those types of things, those are important, but they tend to be more in your that bucket of investments that you have with that long horizon. But if you're interested in trading and really looking to maximize your returns, the kind of cash flow thing is really what works. And what we focus on, we keep it kind of simple. We focus on on stocks. Well, not just stocks, but stocks, ETFs, et cetera. But we buy the options, just simple puts and calls. Once in a while we'll do a straddle or a strangle, and we'll hedge ourselves here and there. But we're not into those big, iron butterflies and these kind of not necessarily complicated, but strategies. And don't get me wrong, there are people in the chat room who do engage in those. That's not really what I provide, but I talk about the key turning points in individual stocks, groups, and that's where we get involved in the ETFs, and of course the overall market as well. And we really move not just in the stock market. I mean, we've made money trading ETFs in commodities like wheat and oil. We've done it in overseas markets, especially in China. We've done it in the bond market with the TLT bond ETF, the HYG high yield ETF, et cetera. So I mean, there's opportunities all over the place. It's not just in the U.S. stock market. So, but again, we try to focus on key turning points for these
Right.
these volatile and obviously very volatile in the last year or two instruments.
Okay, Matt. So do you mind just pulling up your Bloomberg terminal there, and maybe you can start showing the folks a few of the things that you're doing there, and just explain overall, the markets and how you've been able to trade around these markets with volatility.
Okay, let me just pull it up here, and I want to make sure, confirm that you're seeing what I'm seeing. Whoopsie. Okay, this is my Bloomberg machine here. Hold on. Let's see. Actually, I'm going to go over to this situation right here. I'm going to go to and we're going to look at Bloomberg, but I'm going to show you what we're looking at. I prepared a couple of charts here for what we're looking at right now. Excuse me. Got to double click that. Hold on, and I'll blow it up so you can see it a lot better. Don't worry. Let let me just get down to these charts. But we're looking at we're in a very, very, very interesting situation in the stock market, and so what I try to do, which is very important, is that as I talked about with those analysts, the people who are strategists who used to be analysts, and there's nothing wrong with that. I mean, and some of them have been economists, et cetera. But what I try to do is I combine all these things. I understand that. Whoops. Okay, what happened there? Okay, good. Now there's what I wanted. Okay, no, that's not what. Boom. Okay, good. Let's start with the bonds. Okay, let me just blow it up here a little bit for you so you can see it. Whoops, there we go. Okay, here we are. Okay, and I just have to move some things. There's some things on my screen that I can see that you can't. So I want to be. Sometimes it blocks my view. But here's what we have is a situation. Again, I'm going to talk about because what I do is I try to combine all these different factors. I mean, those long-term fundamentals are always important. But the fundamentals, like I said, the markets are not always right. They're only always right eventually. And so if you're only looking at the fundamentals, you're gonna miss some great opportunities, at least on the trading side when you want to be a little bit more active in your trading. And what we're facing right now is that we've seen this nice rally in the stock market, and I think we're right on the cusp of a big increase in volatility. And the reason for that is again, I combine the fundamental situation plus technical analysis. I also use, on top of technical analysis, I also use sentiment indicators, positioning, etc. And then you can really get the feel, because sometimes, hey, the obvious fundamental picture tells you that oil is going to go a lot higher, but you have situations where it looks obvious it's going to go higher, but everybody owns it. Everybody's long it. Sentiment is bullish on it. It's just too many people on one side of the boat. And even though it's going higher, eventually it's going to see a pullback. And we take advantage of those situations. And here's the situation we have right now in the overall stock market. I mean, we've had this great rally since the beginning of the year that everybody knows about. But we've seen a significant change in two of the most important areas of the market. And it's the bond market, yields, interest rates, yields, and in earnings. And the market's been kind of, the earnings were coming through. We heard all through the month of January and into February that the earnings really weren't very good. They weren't bad, but they weren't good. But the worst thing was the guidance, and that led people to cut their numbers. And the people saying, well, the numbers really aren't all that bad. Well, yeah, but actually they were. I mean, now we've gone, for the S&P 500, just 3 months ago, people were looking for $240 for earnings for the whole S&P 500 for the year of 2023. Now it's down to 220, and it's come down to more than 5% just in the last couple of weeks. So in other words, earnings are coming down, and people are saying don't worry about it because interest rates are falling. This is the yield on the bond, right? Okay, this is the 10-year yield. Okay, so it was falling during January. We said, well, we're not as worried as we would normally be. The interest rates were falling because earnings were coming down because interest rates are going down. Well, look what happened. We saw an important change here. We saw it got down to its 200-day moving average. That's something. 200-day is kind of a standard line that we look at, that all technicians look at. I mean, and we look at a lot of different ones. Some people really like the 150-day moving average, but 200 is pretty standard because it's almost a full year of trading. It's about 220 days of trading in a year. So the 200-day moving average is one people look at very closely. Well, we got right down to that level and bounced. But not only, and the thing is, in more recent weeks, in the last week or so, not only have we bounced off that, okay, but we've broken above that trend line. See how important that is? Above, not just slightly above that trend line, way above that trend line, okay? And that tells you, it's like, oh, wait a minute, earnings are coming down, and not only have they come down over the last couple of months, but in the last 2 weeks, they've fallen fairly significantly. I don't want to overstate it. I don't want to say they've crashed or anything like that, but we're looking for numbers that are going to be flat this year. So when you have rising interest rates, lower earnings, that is not a good combination for the stock market. And again, especially, and the other thing, again, when I talk about one of the things that I really should have mentioned at the beginning is one of the things we try to do in our chat room is we really try to keep it as an educational. We also teach people what's going on. I've been doing this a long time, but something. Not only am I like to spend time teaching people, but they teach me things. There's things that I learned something new every day. And the chat room is a great spot. I give a lot of good ideas on what you should pick for a put or a call on whatever instrument. But there are other people in the chat room giving those type of ideas, throwing those ideas out there all the time. So it's not just me. So it's a great community here. But anyway, so one of the things I talk about, and this is what's called a MACD chart. And it's not something that tells you that something is overbought or oversold. It's not showing you a key turning point. What it does tell you, it tells you that after a top or a bottom is made, usually several days, or even maybe a week or two, that the trend has indeed changed, because nothing moves in a straight line. So something's going up, 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 up. It pulls down for a day or two. Okay, no big deal. And it goes back up again. But then once it starts to roll over, we have some tools that tell us, this rollover is actually starting to gain momentum. We're seeing a reversal, or to the upside. Maybe it's reversing to the upside. In this case, we're seeing a reversal to the upside in interest rates. See how this MACD chart, see how it turned to the upside here? It told us that this thing was going to last for a while, because we looked at it here. See how that big move there? See here? Big spike in interest rates. See here, huge spike in interest rates. Here, again, another spike. So again, we use these tools, and what it is, I won't get too far into it, but the MACD chart is, it uses short-term moving averages. I'm sure most of you have heard about the golden cross, which is the 50-day moving average crossing above the 200-day moving average. That's a golden cross. It's bullish. It shows you that the intermediate term trend has really changed to the upside, not just a short-term trend. And then there's the death cross, which is just the opposite. 50-day moving average rolls over and breaks below the 200-day moving average. Well, this one is very similar. Is that we have the 9-day exponential moving average, and what they do is they take another line, which is the sum, or the net between the 26-day moving average and the 12-day moving average. You take that line. And I don't want to get too much in details, but the point is it works the same way. When that combination, when that 12-day, 26-day moving average crosses above or below the 9-day moving average, it gives you that same reason. When you get a positive cross, that means it's going to go higher. If it's a negative cross, it means that the trend has changed to the downside. Well, in this point in early February, it told us that it was moving to the upside. And that was one of the time with this past week, and I'll show you here again. Let's see if I can pull it up. Oops, hold on one second. Sorry here, hold on. There we go. Let me just pull it up here. One more. Well, anyway, we came in. Let me just escape. There we go. That's what I wanted. And let me just show you here the. No, that's not it. Okay, here it is. Come on. Shoot it all. There we go. Here we go. This is the one. Okay, sorry about that. I had this thing all set up perfectly, and of course, that didn't work out. But so what happened was this past week when I saw that, hey, geez, interest rates are starting to break out to the upside. We're seeing that MACD cross, the positive cross, which means interest rates are going up. So that positive move in interest rates is negative for the stock market. High interest rates are not good for stocks, right? So we came in and we made a specific trade. We bought the TQQQ. What that is the leveraged ETF for the QQQ. The QQQ, for those who don't know, is the ETF for the NASDAQ 100, which is we have the NASDAQ composite, which is the big index. Then we have the NASDAQ 100, which is the 100 biggest stocks in the NASDAQ. And it's a lot of big cap tech names in that. So we know that higher interest rates are bad for tech stocks. So we came in and we bought puts in this last week. And sure enough, we bought the TQQQ February 17th. We bought these on the 16th. All right, we bought the $25 puts. In other words, we were betting that the QQQ would go down, but we were so confident, or absolutely confident, that we bought the TQQQs. So in other words, we're looking for the leverage thing. So if the QQQs went down 1%, the TQQQs would go down 3%. And of course, the options would bounce even more. And sure enough, we came in, and you can see now, this is a little misleading because I do have to admit, I sold half when it was up about 150%. earlier in the day. And that's what we do sometimes, frequently do that. It's like, hey, we've more than doubled our money. Let's sell half. That makes it, we're guaranteed a profit, and the rest is gravy. Well, sure enough, I held on to it later in the day. As we got into midday, I sold the rest for 375% gain. So there's a total of, well over 200% gain or on the total position. Now it did go higher, so I didn't, maybe I should wish I'd sold it there. And I wish I had bought him here. You make 375% in one day, and you beat yourself up over not getting the exact top and the exact bottom. You shouldn't be doing this, because you'll drive yourself nuts. I'm telling you, if you get the exact bottom in a trade, it's more luck than anything else. If you get the exact top when you're getting out, it's more than luck. More luck than anything else. If you get both the exact low and the exact high, that might happen once in your career. And all the greatest all the greatest traders in history, all those top Paul Tudor, these hedge fund guys, Paul Tudor Jones and Stanley Druckenmiller, they'll tell you the same thing. And it's the famous saying that Baron de Rothschild made 150 years ago, when he said that, he was asked, how did you become so wealthy? He said, because I always sold early. So don't be afraid. Again, if you make 300% on a trade and somebody else made 350%, don't worry about it. You pat yourself on the back, high fives all over the place, move on for the next one. So I kind of jumped around there, but I just wanted to show you that how we use things. I mean, I could tell you that entail that this is what we do in the chat room. We don't just say, hey, look what's going on in the bond market. Look what's going on with earnings. This is going to be negative for the stock market. You ought to make some negative bets. That's not what we do. We say, well, I mean, again, we'd say, hey, these are you ought to think about some negative bets, but here are some ideas. Here's some specific ideas. And sure enough, we gave the specific trade, TQQQ, the exact expiration date, the exact strike price. Obviously, we tell you whether it's a put or a call, but it's not just a mild thing. I mean, I do a lot of that in separate newsletters, but those are the more macro things. Here we talk about specifics, and while we're giving specific ideas, we give the reasons behind them, and that which I did before. Well, before I showed you this one trade. So again, I've didn't mean to bounce around quite that much, but I just wanted to give you an idea of what what our thought process is, and how we're there we go, and how we're working on what we do, and hopefully, because the whole idea is that, because we have people who've been in the chat room now for a year or more, and they're like saying, hey Matt, I'm seeing this in Intel. I remember I've seen this in Apple Computer. I'm seeing this in the chart in Apple Computer. This is something you talked about 6 months ago, and for a different stock. But now I'm looking at a MACD chart that I never looked at before. I'm looking at an RSI chart that I never looked at before, and I'll be like, holy cow, I didn't even see that. Thanks a lot. And I'll go, yeah, that's a great idea. So I mean, the point is that I can't look at 4,000 stocks every single day, or even 100 stocks every single day. Other people are looking at things, and so it's like, hopefully we can teach you certain things that will be very helpful for ideas that you're looking at. I mean, let's face it, you might be in the whatever industry that you might be in. You say, hey, there's a couple of people who work for UPS and Federal Express that are in our chat room, and they kind of work more at night and stuff with the delivery and things, and but during the day they're doing this, and they come in and they say, hey, I've been delivering a lot for this company, and boy, it looks like they're really doing well, and you mentioned these kind of charts are telling us something bullish, and I'm suddenly looking at Macy's, and I think this could be a great buy here. And boom, so we jump all over it. So again, just sitting back and having somebody tell you, buy this, and we do. I mean, I have a stock picks chart with Benzinga, with a long-term one and an intermediate-term one, and that's great. But for more people want to be more active traders, you want to have a real good idea of why we're doing it, so you can you come up with some of your own ideas. And it's worked out really well. And like I said, the one thing though I do want to say, and I'm kind of all over the place, is, as you can see, I'm very enthusiastic very passionate about the markets and very passionate about trading. But the thing is, and I should have probably led with this at the very outset. If you're trading, if you're not, you don't go in our chat room, fine. But it's all I can say is that it's a good group, and the people who do join, I think, really have liked it a lot. But my point is that trading alone is so hard, and the best traders in the world don't do it. Okay, they don't trade alone. Okay. Oh yeah. Yeah, we don't, they don't do it alone. They don't trade alone. If you're working for Paul Tudor Jones, or if you're working for Stanley, Stanley Druckenmiller runs his own family office now, but whoever, I mean, he still has traders. I mean, and they're talking to each other all day long. Okay, they're not working by themselves. Not only that, okay, you know how many times some trader from Goldman Sachs, Morgan Stanley, Bank of America, you name the firm on Wall Street, you know how many times they call Paul Tudor Jones' trading desk with ideas and things like that? They do it several times a day, many times a day. And just, hey, did you hear this news? Hey, what do you think about this idea? Hey, look what's going on in the bond market. And if those guys are getting those kind of calls, and they're getting that kind of feedback from around the street, and they're able to talk to each other as well, how are you going to compete with those guys if you're trying to trade alone? It's just very, very, very difficult. And again, we're not one of these things where we have 30,000 people in the chat room and you don't know who the heck they are, because you have those people who are they're just trying to pump and dump. They bought something, they see it going up, and so they say, hey, everybody, you ought to buy this. And what they're doing is trying to pump it up so they can sell it, sell it to you. And it's a famous saying on Wall Street: pump and dump. And they're not supposed to do it, but people get it. So in other words, some of these chat rooms, the guy says, "Oh, I'm Joe Truck Driver from East Bumfuck, wherever. I don't buy shit, whatever." And actually, he's a trader at a hedge fund trying to get people to push up a stock so that like they did during that meme craze. They were really pushed up so they could sell the stocks now. Now we don't do it. It's a much smaller group, but it's still a good size, or enough where we can really work together. Now, and the other thing that we really do. It's like we were talking about how working together is so important. I also do a Zoom call, kind of like this, every Tuesday. It's at 11:30 Eastern time. And we go for about an hour. We start off saying, hey, this is me. We'll kind of talk about, we'll do a lot of tutorial stuff, and it'll be, 15, 20 minutes long. And we'll just talk about a couple of, what does a head and shoulders pattern really look like? And what does it mean? And why is it important? Things like that. And that's something we've done. But as it very quickly morphed into a bigger call, something where we go, usually about an hour. I mean, if it's, in the last couple of weeks of August or just before the holiday, and things are really quiet, I'm not going to drone on for an hour and bore you to death just to keep talking. If it's quiet, we'll keep it to a half hour, 45 minutes, if not much is going on. But it usually goes about an hour. And again, we talk about all these things. We try to talk about educational things. And people will come in and say on a Monday or even late in the week and say, hey, in next Tuesday's call, would you mind, could you cover this one issue? You've been talking a lot about it a lot. Oh, perfect. Great. I'll lead with that during the next call. Again, we try to be educational, but we also try to make sure that we keep up with what's going on in the marketplace. The macro picture, what's going on in the because it's important to understand why. There's so many things in the marketplace that people think this way, and it certainly makes sense. But in many cases, the opposite is true. And I mean, one of them is a very simple thing. Where it comes to oil prices and the airline stocks. And people think, well, if oil prices are going up, that means jet fuel costs are going up, and therefore that's got to be negative for the airline stocks. And conversely, when oil prices are going down, obviously their costs are going down, that's got to be positive. They're going to make, they're with lower costs, they're going to still charge the same for their tickets. They're going to make more money. Well, it can work that way, and it does work that way sometimes, but more often than not, it's actually negative, because if oil prices are going up, usually now in the last year or two, because of all what's going on in geopolitical impact, it hasn't been. But usually, between 1980 or mid 80s until a couple of years ago, oil prices were going up because demand was really good. If demand is really good, yeah, that oil prices are going up. But guess what? If demand's really good, that means the economy is doing well. That means more people are flying. Whether it be people on business, they have, have to go out their business things, or people just have more money to go on vacations. And so actually the airline stocks frequently go up when oil prices are going up, not down. So there's a lot of these things that are going on in the marketplace that are important to know. And it's like it's counterintuitive sometimes, but it is how it really works. And so that's some of the stuff that we focus on in that Tuesday call. And the reason why I do it on Tuesday is, I mean, if you do it on Monday, sometimes you're not really into the week yet, and you want to see, how are things developing this week. So I like to do it on the second day of the week. And then, of course, if you do it at the end of the week, so much can change over the weekend. No, let's Tuesday is kind of a good get into the trading day on Tuesday, and then go ahead and and plus, if we did it much earlier than 11:30, then you get people on the West Coast and people in other countries that may not be able to. Yes. Okay. Yes. Anyway, so that's really what we're trying to accomplish with that Tuesday thing, and then we build off of that, during the rest of the week in the chat room. Anyway, so what we're trying to do is again, help people understand what's going on in the market. And then right now we're in a situation where the market, I think the volatility is about to spike higher, significantly higher in my opinion, going forward. And so what we do, and again, so I talked about those specific trade ideas, and we could go over a million of them, but just again, I mentioned that one where we made 300%, and we had one in NVIDIA, which of course has been a stock that's acted very, very, very well, but it got extremely overbought just over a week ago, and we went out and bought some NVIDIA calls, and I'm sorry, NVIDIA puts, and more than doubled our money. Some people made as much as 300% in just a couple of days, and again, the thing is that what we do when we send out those when we do these trades, we send them out. We have first of all, we have in the chat room, we have a separate page where it's called Matt's Important Messages. And it's not always just the picks, but every pick I make, every trade, it goes right into that. Because if people aren't necessarily sitting in front of their computer all day long during the trading day, they come back and they go, geez, are there any new trades I need to be focusing on? And so they can go over and check that out. More importantly, that we've added more recently is that you do get a thing on your phone telling you that a new trade has been, or a new comment has been made. Now, sometimes the comments will be, "Hey, it's not a trade. It's a hey, this is really important. We're keeping a close eye on this. Watch this for the rest of the day." But most of those things are trades. So if you're doing something else and you're not in front of your computer, you get that trade. You get the entry level and the exit point. So that when, because like I said, we talk about specific trades. We don't just talk about, hey, this is going to be really bullish, you ought to buy some calls, or hey, this is really bearish, you ought to buy some puts. We give specific trades, the expiration date, the strike price, obviously whether it's a put or call, and when we exit. Same thing. You get a message saying, "Hey, new trade's up. Oh, geez, he's taking a profit here. Good to know." And then you can make your decision on whether you want to do it or not. I mean, some people, we've had situations where we've made huge, really nice money. One trade in particular in the Chinese stock market last year, where we made over 5,000%, believe it or not, in 2 days, and. But some people held on. I even told people, it's like, you can go ahead and hold on to this if you want and take a little chance. I'm not going to. We'd sold half with about a 3,000% gain. We sold the other half with an almost 8,000% gain. But other people did hold on to the next day and made over 10,000%. It was quite remarkable. So, but it is, at least you get an idea of when we're going in,
right.
when we're leaving, and if you can make your decision after that. But it's worked out extremely well.
So we're getting a ton of questions here about the live room. We're going to go through this really quick, and then we'll get back here into the session because we do have some other things that Matt will be discussing here and things we'll be doing with everybody. So first question here, are the Tuesday session? Yes, the Tuesday sessions are recorded, Michael. If you need access, you just request for that basically, but the session itself, that's just for the chat members, Tuesdays, 11:30 a.m. Eastern till about 12:30. Right, Matt? And
You're right, yeah.
Then, okay, so that's a good question there, Michael. Let's see, next one. The chat room schedule. So the chat room is open Monday to Friday from 8:30 till about 5 p.m. Eastern. So it's open pre-market during regular trading hours and after the close, right? So you will have time there where you have that communication with Matt Maley where you can talk with the group or with other members. We'll show you that later. A good question. Let's see. Does Matt provide education? Yes. So in the Tuesday sessions, there's a ton of education, but also throughout the trades and everything like that, Matt will be explaining why he's making that trade, and he will be, he also answers questions as well that you can put into the chat room for the people that are trying to learn as well, right? Chat room notifications. So you can have it live popped in. So through your computer, laptop, and if you download the Benzinga app, with your credentials, you will have the push notifications. So that's a mobile push notification that you will get on your phone wherever you are, in the kitchen, in the bathroom, in the garden, bathing your dog, whatever it is, you'll get that alert. So even if you're not in front of your computer, especially for the folks that have full-time jobs, this is great because you have to do what you have to do, and you get that immediate alert that Matt just is taking profits. So that kind of helps you with time-wise of the people that have a full-time job. So that's a good question also, Jeremy. Let's see, how much capital is required to make these trades? So these calls and puts, Matt, that you're buying, they're about 80 cents, 70 cents. These are not very high-end cost calls and puts that you're buying, correct?
Right. Yes, Steph. That's right. And we like to be able to buy more than one, so that in some cases people buy a lot. But because if you just buy one, that's tough, because then you've got to get that timing right. Whereas, like I mentioned with that one trade we did just a few days ago, where we sold half after it had already been up 150%. Then I knew, hey, I not only did I covered all 100% of my costs, I have a profit already locked in. It's over. The rest is just gravy, and it gives you a little bit more time to let it run. And it's funny because, like, I left some on the table because I sold at that lower level. It's like, well, actually, you tend to make more money because you're a little bit more willing to let the rest of it ride for much longer, and you actually tend to profit a little bit better. So
right.
Yeah, I'd like to keep it lower price so that people can buy more than one at any given time. And
it's easier to manage, right?
Exactly.
Because you do preach and you practice risk management when you're mentioning, hey, this is a small position, I'm building into it, or I'm taking half profits and I'm letting the rest ride and such. So that's all something that you already do. So that's great for the people that are new. They really don't have to make mistakes and learn because you're already doing it the right way with them. So Matt, also for the folks that do have questions on stocks, right? You do also help people because, I mean, you're a chief market strategist, you're an analyst, you're a global equity analyst, not even just US equity. So you have a good grip on how you can profit from things that are happening outside the US. But just to wrap this question up, folks, basically you're getting the live room with Matt all day, Monday to Friday. You get 6 email trade alerts per month, and those are going to be stock swing trades that you'll make so that you diversify the trading portfolio. And again, full access with Matt, the Tuesday session, all of that. We're going to put the link in the chat for that. But Matt, what do you have to say about the prior topic?
About the which topic?
The topic where, as far as like traders helping them out and how you would describe this. Yeah.
Yeah. Well, again, going to that is we've kind of talked about it where it's working together is such an important thing, and the markets are tough as it is, and we have a lot of fun with each other, and we joke around a little bit, but just to keep it light every once in a while, but we take it very, very, very seriously. But the whole idea here is to make sure, help people not just to understand what they're doing and why they're doing it. And there's so many people, so many things on Wall Street that are, again, counterintuitive to what you might think at any given time. And I guess my biggest thing is when everybody's talking about something, when people become extremely bullish about something, or on the flip side, people become extremely bearish, that's usually the exact worst time to buy. If things are really bullish, that's the worst time to buy, because everything's always out. There's nobody left to buy. Everybody's talking about it. It's already gone up too much. Same thing when everybody sells. everybody's bearish. And we saw that at the beginning of this year where everybody was bearish on the stock market. And sure enough, the stock market rallied strongly. So, we're trying to teach people, here's the situation. We talk about everybody on one side of the boat. Here was this, the trade we had in China that I talked about where we made over 5,000% on a trade. It was in China's stock market. Here it was getting hit for for most of 2021 because they had, the Chinese government was clamping down on all these different industries. And then early in last year, we knocked it down. The U.S., because the U.S. came in and said, hey, we're thinking about delisting a bunch of your shares. Well, they didn't mind knocking down their own stock market, but when it became to the point that we knocked down, and look again, I used a combination of fundamental analysis, knowing that this has been already priced in, extremely oversold. This RSI, relative strength index, again, that's another thing we teach about. Again, when it got oversold, it got down to this yellow with its green line. It means it's oversold. See every time it got down to that line, how the market bounced each time. Well, here, look how ridiculously oversold. Most oversold ever. The FXI, large cap ETF. Well, sure enough, the next day, the market bounced. I knew what was happening. It was the most oversold ever. And I knew that the Chinese government, from experience, that they would come in and support their own market. They would buy the stock market with both hands using government money. And sure enough, can you imagine waking up one day and having the Dow Jones Industrial Average up 27% one day? That's what happened. And we came in and we had bought these puts on the 15th. Then the March 18th puts, that's the expiration date. We bought them on the 15th, sold them on the 16th. Okay. But again, we bought the March 18th put, $30 call options. We sold half at just below 3,000% gain, the other half at just below 8% gain at the very end of the day. And like I said, some people held on to it because we had the March 18th puts. They still had 2 more days of expiration. I just felt it was just too much, not to take profits on. But again, here experience told me, should we sell them? When they were opened up over 1,000%, usually I'd say 1,000%, get out, take the profits and run. But I knew their government would keep buying the stocks. But I was like, geez, once we're there after an hour of trading, I'm like, geez, we're at 3,000%. We got to take something off the table. And that's what we did, but we didn't sell all of it. We sold half. And again, just the idea of what we're trying to do. And we've got so many different, we did some April, here's some QQ, but we like I said, here's some VIX options where we made over 80%. More, we do a lot of these index things, but I just want to show you, it's your Apple computer last spring. Again, this has been, we do it. I wanted to show you, I hope you saw those different trades happening all through the year last year. It wasn't just once in a blue moon. Now, don't get me wrong. Making 5,000% is not something that happens very often, but we have some real good ones. Here's Apple Computer. I knew that the stock was being sold because this was going on during when Bitcoin and the other cryptocurrencies were crashing, and they were getting margin calls. And I knew they didn't have enough money to meet their margin calls. So what did they do? They sold what they could sell to meet their margin calls, and that had something to do. And of course, let's face it, I knew. Apple Computer. It's like, well, these guys own Bitcoin. They don't own General Motors. They own tech stocks. And I kept trying to think, why is Apple down so much? Yeah, Bitcoin, the market's down a little bit, but there's no negative news out in Apple, and Apple's down 10%. And it dawned on me from previous experience that we're getting margin calls in a very illiquid market, the cryptocurrency market, and people are having to sell other things. And as soon as the cryptocurrency market calmed down, I went in and bought Apple shares because I knew that forced selling was over. Those margin calls were over, so the pressure would come off of Apple Computer. And sure enough, you can see we made over 400% in just a day. But my point I'm trying to make is that it's not just it's not something where we do just well, that was a Viacom trade, but I told you, this was another one where we made 5,000%. Where again, see how overbought the stock had. Let's just start this really quickly for those who have never seen. I think I talk about this most times, but the RSI, Relative Strength Index, and I mentioned it on the Viacom. Well, here's one where it got ridiculously overbought, right? And again, that was during the meme stock craze. But you see, every time the stock got overbought, it sold off. See how it got overbought here? Sold off. And you see, when these RSI, this Relative Strength Index, gets to 70, they put that's why it's a red line. Stop buying. It's overbought. When we get down to the green light, it says, go ahead, buy it. Go ahead and buy it, especially if it goes below that line, because it's getting oversold. Well, this was the most oversold I had ever seen. It was above 97. I said, you got to be kidding me. We went in and we bought puts on Viacom. Viacom is no longer exists anymore. It's now Paramount. But this is only a couple of years ago, as you can see, from 2001. But the point was that stock dropped 60% in one day, and we made, again, there was another thing where we sold half after a 2,500% gain, another half after, so the other half when it was up 5,000%. Again, this is a situation where we don't get this every day. I'd love to. We do get them every once in a while. We don't get them every day. I don't want to try that, but as I just said, that we do get a lot of these. And it's not just once in a blue moon. As I said, we just made 300% last week. Here's a trade in Amazon. This is a great example. Amazon wasn't even my trade. The people in the chat room said, hey, Amazon's about to split. The stock usually rallies right before the split. We ought to buy some calls. I checked the whole thing out, and I was like, came back to them 5 minutes later and said, it's a great idea. The problem for me is I said, I've got a bunch of other trades on. I'm not going to take advantage of this one. But you should, go ahead. Well, they did, and look how much money they made. Again, some of them sold here, others held on to it for another day, made over 1,500%, and in fact, I think others made as much as 2,500%. And of course, the dope that I didn't go along for the ride. But that shows you how we have these things where it's not just me who's giving the ideas. It's other people in the room and in the chat room. And it's just here's another one with advanced micro devices. So we do it for individual stocks. Again, you see we do a lot of these QQQs. Here's XLE, which is the ETF on the energy stocks. I've been very, 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 very bullish on the energy stocks for a long time. I mean, literally since October of 2020, I've been very widely bullish. I turned much bullish much before anybody else. In fact, we had people in 2020, in 2021 were saying, hey, look how smart I was to be. We were up 50% in the energy stocks last year. I was like, great. We were up 120% because we were there at the key turning point. So we're trying to get the key turning point. Right. That's where you get the biggest profits. So you can see this is something we do in many different areas, not just, so here's wheat again, where we did WEAT. It's not, I'm not a poor speller. It's just it's the symbol for the wheat, the ETF for wheat, and we made over 250%. So again, I don't want to overdo the
right. So
thing there, but it just gives you an idea. This is something we can able to do on a consistent basis.
Yeah, so I posted really quick for the people in the chat. If you do have an options trade, put it out there. If it's a call or a put, we will be going over some trades. But before that, right? So while you guys prepare these trades, we'll be going over maybe 3, 4, 5. Who knows? If Matt's in a good mood, we might go through more. But Matt, so what would you say? Right? Here's the thing. Right? Buying and holding is just it's a sucker's game right now. It's been for a little while, but is there a place that you would say comfortably, right? You can start slowly building a position, buying maybe a couple shares a day, like something long term in a good sector, maybe a sector that's not too crowded. I know you've talked about different stocks because since I've been following you, and I know that you your trades and all these things, you're always looking at different sectors. What's a good long play that folks can start looking at long term for stocks?
Well, one of the things I want to show you here, and it's usually you like to get some of these stocks that are really. Let me do another one here. Let me just look at it. Is that you like to get them when they're kind of beaten down and when they're in great shape. And one of those that I like is Google or Alphabet. Google is the people, everybody's all worked up about AI, and I'm like, okay, yeah, I understand that, but these issues, these big game changers, their stocks explode higher for a short period of time only when there's massive amounts of liquidity. There was a massive amount of liquidity in the system in the late 1990s. A lot of people think that the reason why all those stocks rallied were because the stock market was going, because people were thinking there was a new economy. It's not what happened. What happened was everybody was worried about this issue called Y2K. And Y2K, I'm going to it, but anyway, we poured billions of dollars into the system, liquidity behind the scenes. It wasn't outwardly like we did during QE, but that's what pushed all these innovative stocks to new highs. Okay, when the liquidity, and then 2000 came up, that was the Y2K. It was briefly to just say that in 2000, every computer was going to go 97, 98, 99, 00, 2000. The problem is every computer in the world was going to think it wasn't 2000. They were going to think it was 1900. Okay, because it was always, they just had the two numbers, 98. So it's 1998, 1999. So they just said 98, 99, 00. That means it's 1900. Oh, so I mean, all the amount, geez, I was whatever, how many years old at the time. My bank account would have showed how much money I had in 1900, which was of course zero because I wasn't alive. And all your companies would say it was literally a potentially could have had huge implications for the financial markets. Go back, if you're not familiar with it, go back and look it up. But the thing is, they fixed it. They spent billions of dollars for many years flooding into the system so that this thing could be fixed and that there'd be money available for it to be fixed and that people wouldn't pull their money out of the banking system, and gave them confidence, and it worked. But guess what happened? It's not a coincidence that the top of the tech rally took place at the very beginning of 2000. It happened because once they realized that 00 was working, that 00 on the computers all over the world were reading the year 2000, not 1900, then they pulled the plug on the liquidity, and the market went. Well, the same things happened this time. Okay, we had in March of 2020, all this liquidity was poured in through QE and zero interest rates because of the pandemic, because the global economy had all but completely shut down, and the markets were imploding. People could, especially the fixed income market, people could not get trades done. If you can't get, if the government, the government bond market, the U.S. Treasury market was starting to shut down. You believe that? I mean, supposedly one of the biggest firms on Wall Street in an overnight trade was unwilling to make a market in the 10-year Treasury note, U.S. 10-year Treasury note. Imagine that. U.S. Treasury, the safest bond in the world, most actively traded bond instrument in the world. They wouldn't make a market in it. Things were freezing up, so they flooded the system with liquidity, and that again pushed the markets up well above their underlying fundamentals. And that's why all those innovative companies did so well. I mean, not because they're incredibly innovative. So AI is going to change. And let's face it, the best of the internet companies from the late 1990s, their stocks got killed for a couple of years, and then they came roaring back and did very, very, very well, right? You owned Amazon, you bought Amazon in 2001. You made several with 3,000 or 4,000% on your money, okay? But the thing was, their stock still dropped 90% before it bottomed. Now, I'm not saying these AI stocks are going to bottom, going to go down 90%. What I'm saying is that without that liquidity, these stocks will take more time than people are used to change the world. And Google's getting a lot of people saying, "Oh, Google's going to go to zero" and all this other stuff. Not going to, people don't think that, but people are worried that this whole AI thing, that they're falling behind in the AI issue. It's overblown, but the stock is trading. Now look at this, it's trading at a, but I want to talk about another one too. So don't let me, I don't want to get too caught up on Google. But you can see here, it's trading at 18 times forward earnings. I mean, Apple and Microsoft are still trading in the high 20s or mid to high 20s. That's expensive for those names. I know it may seem like that, but on a historical basis, they usually don't bottom until they get into the teens. Well, Google is in the teens, okay? So my kind of thing is to buy a little bit of stock every single, and Rodrigo talked about, I have not only in the chat room, we also put 6 trades a month. 2 of them are long-term trades, and 4 of them are shorter-term trades. And one of my long-term picks is Google. And my thing is saying, buy that stock a little bit every single day for the rest of this year. Not every single day, I'm sorry. Every single month, pick a spot in the month and buy it. I'm telling you, a year from now, you're going to have an average price that's going to look very good. And because it's hard to know the exact bottom in this thing. Could it trade down to 16 times earnings? Sure. But it's going to go back to above market multiple. And in this stuff, it's going to be like Amazon. It's you buying. The thing is, buying Amazon in 2000, 2001, it actually bottomed earlier than most of the rest of the stocks. It bottomed 2001, maybe 2002, but it didn't, like most stocks didn't bottom till 2003. Amazon bottomed much earlier than that. And those who bought it just gradually, just a little bit here and there, here and there, here and there, and then, 5 years, 10 years, oh my God, they They loved it. Okay. This is the
Right.
same thing we're doing with Google. Those other names aren't cheap yet. The other one I would say, though, is in the defense area. The one I like is Lockheed Marriott, Lockheed Martin Marriott, Lockheed Martin, LMT, real quickly. Just real quickly. But the reason I like this stock, yeah, Lockheed Martin was the Martin Marietta. It was the comment. It was the old company that they merged with. But look at this stock here. I guess my point right now is I'm looking on a long-term basis. The world's not getting safer. You see the stuff that happened over this weekend. We're seeing more locking heads with China, and it's not just China and Taiwan. There's also the issues, of course, in Ukraine. But I'm also worried what's going on between Iran and with Israel. Israel is like they're getting too far on their nuclear capabilities. So there's people who are worried. You'll see this big sell-off here. Everybody's worried that, oh gosh, we're going to have defense spending is going to go way down. That's not going to happen. I just don't think it's going to happen at all. So this is a good stock that I like too. Anyway.
Matt, so no, and definitely, man. I mean, like since the whole Ukraine thing, you could have said this, but let's say with everything that's happening, I know the Raytheon is there too. I don't know too well. I know LMT does the ICBM. I think the ICBM stuff. Would you pick LMT over Raytheon or?
Well, that was funny because I did look at that when I was. I mean, I both of them. The one. Sorry, here. Let me just hit my little escape button and see if I can pull it up. One to consider. Okay. And they've had all sorts of problems. Is also Boeing. They do, and again, you see it's had this great run. It's flattened out. You might want to get a little bit, but I just want to show you something here. Okay. Yeah, that's a nice rally there, but look at this. It's so much lower than other stuff because of all that problem. Remember, they had that problem with their 737. Big problems there. And the stock is over now. I'll show you something over here. Hold on. SPX. I'm going to look at here. And again, these are the types of things that we try to talk about in the chat room. Look at Boeing, and again, I don't want to. I like both those names, both Raytheon and Lockheed. But look at this. I just want to show real quickly. Okay, good. Sorry. Okay, let's go back though. Why is that not working? Okay, hold on, let me try again. 2015. Okay, there we go. Okay, look at this. Look, I'm hoping to see that blue chart. Let me open up a little bit. But see how badly it underperformed. How move it up a little bit. There we go. But see, this is Boeing. Well, the rest of the market went up, even though it's rallied here. Okay, it's way behind the rest of the market because it started going down right over here long before the pandemic because they had that 737 issue. Then, of course, it fell out of bed because everybody stopped flying, right? But it hasn't. You think, well, everybody's back flying again. So, well, it hasn't gone up as the rest of the market. It's still lagging well behind the rest of the market. So here's another one where, again, a lot of people forget that they have a very big defense contract business. It's not just making 757s and 737s and such. So there's another name that I like in that defense. I say again, I'm going to say defensive industry, not the defense industry, not defensive stocks. So defensive stocks are like Procter and Gamble because people still need to buy toothpaste and stuff like that. But it's a group that I just think the world is not becoming a safer place. And again, I'm not calling for World War III or anything like that. Some people seem to be. But either way, we are not going to be cutting back on defense spending the way people were thinking just a month ago.
What about cybersecurity? What has been happening? I mean, that's obviously high demand, you'd say, right? Do you see anything in that sector?
Well, I mean, it's the one thing. It's been very volatile, and but it's definitely one that it's going to become more and more. It's already vitally important. To say it's become more and more important is quite an obvious statement. The one problem is that they of course have had some issues there. They haven't been able to avoid some. I guess my point is this problem with Bitcoin and some of the cryptocurrencies and the debacles that have taken place there, and the inability of these cybersecurity firms to avoid. And again, I'm not, in many of these cases, it had nothing to do with those firms, but it's overshadowing the group. So yes, it's a good play, but we need to be a little bit more. I mean, I guess, to be honest with you, they have to get a little bit better at what they're doing, because they're starting to get they're starting to have some holes punched in their abilities to protect people as much as they would like to.
Right. So we have a couple of trades here from the chat members. All right. So let's go over some of these. So S Kim 61 has UUP March 17 calls, $28 strike price.
$28. Okay.
And that's funny because you actually also trade the UUP in the chat.
Yeah,
room.
absolutely. And we've made money on the U. And for those who don't know, UUP is the ETF on the dollar. Okay. And here the $28 calls, is that right? Okay, so that's, see, I like this. Now it did pull back a little bit on Friday. That's okay. Nothing moves in a straight line. But look at this thing here. Look at a couple of things. Now you see there's a million lines here. So let's get rid of some of them because it gets a little busy. These are all moving averages, but the 200-day moving average is the purple line. Okay. Now, so we're looking at here, the dollar is not particularly overbought. I mean, it's starting to get close to it, but it's not overbought. I mean, not like, see how overbought it got over here and that caused a pullback. But even then it just pulled back here. But here we are. Excuse me. So we looked at the RSI chart. Now let's look at the MACD chart. Remember we talked about MACD a few minutes ago, and this looks quite good. See how we got a, oh, I should have done it another way, but it doesn't matter. It only takes me, just takes me another minute to clean it up a little bit and make it easier to see. But again, we see how we got the real nice positive MACD cross. The question now is, can it break above its 200-day moving average? See how it got up to the 200-day moving average and pulled back. So we're going to see. But right now, it looks quite good to me because of this broken trend line. Not only is it broken above that trend line, it's broken well above that trend line. Okay. And so I just, these are the types of things we see that the change in trend is taking place. If it gets up here and rolls over, is that possible? It could be, but I still think this thing has got further to go to the upside. Again, like I said, not overbought before. And again, we're talking about the UUP, which is on the dollar. Let's do this real quick. Currency, and which is going to look the same. This is the DXY dollar index. Boom, 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 boom. Same thing, broken back above that. This is the 50-day moving average. This is the yellow line is the 50-day moving average. But see this? This, see, it's not overbought. I'd be much more concerned if it was closer to that overbought territory. We look at the Bollinger Bands, which is another thing that we look at. See, it is bumping up against that thing there and the Bollinger Bands, but it pulled back from that on Friday. So then, again, it doesn't surprise me that it's pulling back a little bit. But the one thing is, on an intermediate term basis, let's look at this. Okay, we're going, well, let me go back to the UUP because that is what you own. P equity. Oops, what do I do here? UUP. Okay, sorry about that. UUP. Okay. Give me another second. Only take 2 seconds on that. And then MACD. Remember we talked about the MACD chart already broke, but let's look at this one. Okay. Look at how this is starting to curl up here. Okay, this is giving us a very interesting thing here, which you want to be looking at. We get a positive cross on that weekly MACD chart. See what happened the last time I got a positive cross on the weekly MACD chart? Hello. Okay. Look how it's pumped. See how it came down? It tried to hold that. This is the week. So it's the yellow line, instead of being the 50-day moving average, is the 50-week moving average. And of course, when moving averages are important, but the further you go out, in other words, day, month, year, I'm sorry, day, week, month, year. The weekly is even more important. See how it got down to the 50-week moving average and tried to hold it a couple of times. When it finally broke below it, it got killed. Well, now it's bumping up against it, and we can see 28.23 is the 50-week moving average. We got right up to that line on Friday and pulled back. Fine. Again, nothing moves in a straight line. It's going to bounce around. You break above 28.23. Now this line will move up a little bit as time goes on, so it'll adjust. But you get above that 50-week moving average, and you get a positive MACD cross on the weekly chart. Hello, dollar's going to go a lot higher. Now you still got a couple of weeks left. You got basically a whole month before these options expire. It looks pretty good to me. So the one thing you want to keep an eye on, if we do break below here, you get the low last week was 27.75 basically. The week before that, 27.70, below 27.70, and then you'll have to worry a little bit more that the new upsurge in the dollars is probably not going to be as strong as you'd like. But it looks quite good to me for those reasons.
Right, that's an interesting take here. Let's see. We have several other requests. Curtis, Mr. Curtis, how you doing? RUN run March 17th call, $17.50 strike.
Oh, wow. So if well, they're already in the money quite nicely. The one thing let's look at here is that, I'm going to say, I just want to look at something. It's kind of neutral, but I did see what they call a death cross, but they got a death cross here and it did nothing to the stock. So this is the 50-day. Let me get rid of the 100-day. You see, you always want to look. One of the most important things, always look at what's happened in a particular stock at any given time. And how these cross. See, we got a golden cross there. Yes, it was very bullish. It was only bullish for 3 days, and we'll roll back over. Okay, and it got a death cross right here. The 50 when the stock didn't go down. It didn't go down for another month. Okay, then we got a golden cross that did help. The stock did rally there. So we got another death cross, but it hasn't hurt the stock at all. So I wouldn't worry about that. Number one. Number two, though, you're looking at a situation where you kind of let me just look at it. One thing here. Here is looking at what's on a purely a closing basis. Let me try it again. Sorry. GP. There we go. No, okay, good. Okay, I'm going to go back to the regular. So we're looking at kind of a symmetrical triangle pattern. Okay, now let's get rid of these moving averages. We've already kind of looked at those. Okay, now you can see here what I was thinking, and it could be you could say that this is a descending triangle pattern. It didn't really touch those, but it's you can see how on a shorter term basis, so if it broke below this low here, that would be a big problem. But I don't, the fact that it was able to make a slightly higher low, that's bullish. The problem is it's a symmetrical triangle. So it's been seeing lower highs, but higher lows. Technical analysis, there's nothing worse than something that is continually making lower highs and lower lows. Nothing better than when something's making higher lows and higher highs. Here, they're making lower highs, but higher lows. So, and that causes what you call symmetrical triangle pattern. And that's kind of what we're looking at right here.
Really quick here, Matt. Big shout out to Michael, newest member, joined live here with us.
Great to have you here. Thank you. I'm just trying to draw these things out. Sorry. Okay, so that's a little bit, you can see it needs to break out of this thing one way or the other, but let's draw it on a little bit shorter term basis. And so I guess what I'm saying is that the stock looks, good because it's made, I like the fact that it's made a lower high. I'm sorry, it's made a higher low. And let me just draw, this is going to be the shorter term triangle I'm talking about. Okay, and let's get rid of some of these signs. And let's go. See this line, see how it's again, no matter how you face it, what we're looking for is to see if we can break out of this thing to the upside. I guess and what I'm thinking is right now, right here, see right here in that 2250-ish range, the 2250-ish range, it bottomed there twice. If it breaks below 2250, that's going to be negative for the stock. And what we're hoping for more is that this bounce here is going to take us higher, break above that trend line, especially if it can make a higher high above 29, it'll really run. But again, 2250, you want to be getting out of any position in that stock. But right now, the fact that it was able to make a higher low, and it does bode well for the stock. And did we look at the MACD chart? Let's just look at it here. You can see the RSI chart is very neutral. Hold on a second, sorry. Bang. There you go. Now see it right here? It's been kind of making a couple of head fakes, right? It looked like it was going to make a negative MACD cross. It didn't. It did here that, but it's making a very, very small positive MACD. So that's good. And I would say watch that 50-day moving average, which is $26. And get above that, the stock could run. But I like this. So in other words, it's neutral. We're in that symmetrical triangle pattern, but the fact that we're getting a positive MACD cross tells me that the odds are higher that the next move will be to the upside.
Okay, we have TinVet 12 with gold $15 calls expiring March 17th.
Oops.
And also, you know, Matt Maley's take on gold as well overall.
Right. Now this one, gold, is Barrick gold. Is the symbol for Barrick gold, not for gold, the commodity. But I'll look at that, and we'll look at that in a minute too. See now how this is the thing that I own this. I own this stock personally on a long, and it's one of my picks in the long term basis, and I'm not selling it. I'm not, and I'm thinking about buying some calls in this as well, because look how it's, you know, again, when it got up here, I said, hey, let's be careful, don't chase it. I mean, I flat out said, I wrote about it in the mailer report that I put out. You know, it says even though we had gotten a golden cross here, technically, you know, when you really want to see both lines, and again, when the golden cross is when the 50-day moving average moves above the 200-day moving average, it did that here, but you can see that the 200-day moving average is actually falling, not rising. I like to see them both rising, but it can still work. But the reason is, it just see how it gotten overbought. And I'm like, no, I don't want to be chasing it up here at $20. So we you know, I said, don't sell it. But for those who want to, people don't add to your positions here. So I'm thinking about adding it down here, and I'm certainly looking at calls. But see how it's gotten oversold now? Again, same level. It got same level of oversold on its RSI chart than down here just before it popped. And it got to here just before it popped. Then it got to here just before it popped. And these pops were all a week or two. That lasted at least a week or two. So this is something that I think bodes well for gold. And I do not own the calls right now, but I'll be looking at them next week. It'll be interesting to see what happens if the overall market gets hit hard, which I think is very possible as we move in the coming weeks. But some gold could be one of those flight to safety plays and could rally more. That's what I think is going to happen. That's why I like it. I also like it because I do like, on a longer term basis, again, we're trying to combine this kind of technical analysis along with fundamental analysis that says that I think that that inflation is going to stay. It's going to stabilize at a much lower rate than the 9% we saw earlier in the year, but a much higher rate than before. And the economy is going to start slow. That caused stagflation. There's nothing better to own during stagflation than gold. So I like the options here, and I'll be looking at them. And I like the common stock in Barrick Gold as well.
All right, interesting there. And for all the folks that are sending me these messages, I put the email and the number to call. That's the only way that you can get the deal today with Matt Maley. or you can just click on the checkout while it's available. It's all on the chat for all the people that are asking. Matt, so we're getting a ton of questions here about SPY and Qs. Okay, so you're sacrificing the picks, the Microsoft Baleari for SPY and Qs. You're taking one for the team. Okay, so SPY and Qs there. Chief Market Strategist Matt, can you imagine? Just imagine being in the live room all day, trading with Matt, asking about tickers, entries, exits, different ways to trade things. This is how it would feel like, right, Matt?
Absolutely. And that's what we're talking about all day long. People ask me about their long-term picks all the time. But we do concentrate on the shorter term trading ones. But people all the time say, hey, I own this stock I bought this for my daughter a while ago. I'm thinking about adding to it. What do you think? What do you think? And I'll talk about it. Now, let's talk about the SPY, because we are at such an important technical juncture, in my opinion. And we already talked about what I said on the macro picture. Number one, I wanted to put. I'm gonna bring it up here. Hold on. Okay. Now, I'm going to see how we're coming off that's the RSI. I'm doing a circle there. So that's, like it was back here. So it's overbought. It's coming off an overbought thing. Okay. So I'm going to get rid of the RSI just so we can see the MACD better. Okay. Boom. Okay. Now, what do we got going that's positive? Okay. On the positive side of things, we've had a nice breakout. Okay. So see how the, I'll bring the 50-day back in a second. I'm going to take away for now. But see how the 200-day, it got above the 200-day moving average here at the very beginning of the bear market. A couple of times, but couldn't hold it and fell badly. Then it got right up to the line, fell badly. It barely got above it, fell badly. Now we've got more above it than we had. And that, is something that the bulls are excited about and should be. What's the other thing? We also broke above this trend line going back to the beginning of the bear market. So both the 200-day moving average, nice break above there. However, let me just pull in one more thing. I'm going to get rid of that trend line just because it's going to make it easier to see. And we're also seeing a golden cross, right? The 50-day is moved above the 200-day. So that's positive. However, we always want to combine a lot of different things. First of all, we want to combine, look at what's going on here in this MACD chart. It's now seeing a negative cross. It's a relatively mild one. It's not a tiny one, but it's still relatively mild. Let's see what's happened here. See what happened there? Negative cross, boom. Negative cross, boom. Negative cross, boom. Negative cross, big boom. Okay. Negative cross, big boom. Okay. So you can see over. I should zoom this in so you can see since the beginning of the bear market how negative these bearish crosses have been for the stock market. And so my thing is that a lot of these, and we've seen head fakes in the past. That I'm saying there are some bullish things out there, but this market has got to either, is this just something? Okay, it's just a sideways move to work off an overbought condition. It's about to take off. That might happen. I don't think it is because why? Because interest rates are moving higher. Number one, and number two, earnings are going down. Without added liquidity, without QE, we can't stay at 18 to 19 times earnings. It's not, and especially with interest rates this high. The market can only stay up. Like I mentioned earlier, markets can only stay as ridiculously expensive as they were in the late 1990s and as they were in 2021 if there's massive liquidity. There is no massive liquidity. And you know what? A pause does not add liquidity. Okay, a pause just stops the tightening, but it doesn't add liquidity. You cannot have, and not only are we trading at 19 times earnings, all right, we're 2.3 times sales. That's the kind of number you see at market tops, not at market bottoms. The thing is that it gotten so overvalued, it got to 3 times sales, that coming down make it seem good. But this is 2.3 times sales is way higher than we saw at the top in 2007, and about the same level we saw at the top in 2000. Not the bottom, the top. Okay, so this market is way overvalued. Without that added liquidity, it's going to be very, very difficult to hold up, especially now that the E part of the PE ratio is going down. So that 19 times earnings is probably really closer to 20 times earnings, and et cetera. But let's go back to this. Again, we're looking at this cross here. That's negative. You also have we're going to the QQQs. I'll just do that real quickly. QQQ. Whoops. QQQ, equity, MACD. See, same thing. Negative MACD cross. And the thing is, the rally, this sideways move is being held up by a few names: Microsoft, Apple, Tesla, Nvidia, and those things are starting to show signs that they're rolling over, especially Microsoft. And those things start to roll over. It's AMF, adios mother, as you can get, you can guess what the F stands for, all right? And things are going to turn negative. That maybe it doesn't happen quite yet, but boom, we got rid of that. The chances it could happen next week. That's why we got to be very, very careful in the marketplace. I don't know if anybody's heard about this thing. There's this thing it was in the news. I'm not giving away any inside secrets here because I have no idea if I have no idea if it's true. I'm just going by a read that 50 cents is back in the marketplace. So what the heck is 50 cents? Well, 50 cents is a trader who buys VIX call options for 50 cents or about 50 cents. And he bought some real nice ones in 2018 that made a lot of money, bought a boatload of them in 2020 that made a real lot of money. And supposedly he's back in the market. He or she are back in the market buying them again. And they're out into May. I believe they're the $50 or $55 calls. The person made, again, it was very, very right the last few times they've done it. Well, if the VIX, which is at 20, is going to run to 50, between now and May, stock market's going to have to get hit really hard. Again, I'm just making you aware of this. It's out there. Let's see if I can even, by the way, if you want to see for me, I said, I'm on CNBC and Bloomberg. Here I am, here's the number of times I've been quoted here on Bloomberg right here, talking, and just, since the beginning of the month, quite a few times. But anyway, let's go. Let's see if they say 50 cents. Let's see if I can get this on here. 50 cents. Oops.
So this is like it's a real person out there.
It's a real person, okay? And again, this is I'm not going to bore you people, but see, Nick Nader, 50 Cent has placed a big bets on the VIX. Is known Wall Street's big will surge. Someone bought $100,000 of the that on the $50 May VIX calls. So the 100,000, so they bought 150. It's 2 point. I mean, this guy's spending millions of dollars. Okay, guess what? If he's not right, that money goes to zero. Well, I mean, assuming he doesn't sell it before then, but that's an awfully big bet. You better be darn sure of it. What you're doing. Now again, he's going all the way out to May. He or she is going all the way out to May. When somebody makes a really big bet like that for the next week, you see that every once in a while. It may not be it might be like for a takeover. They see suddenly somebody's buying the heck out of some call, and they're like, what's this? Nobody makes those kind of bets out 1 week unless they know what's going on. It's insider trading. And so sometimes you try to jump on there and piggyback them because you can't accuse for insider trading if you have no idea. You're just trying to guess what somebody else is doing. Now, it's hard to say this person has insider trading because he's going out going out a couple of months. But here's again, you can see this thing. Mysterious trader known as 50 cents. Look it up on the internet. You can find it there. But somebody's betting that somebody who has a lot of success.
Jerome Powell.
Yeah. I was just a joke when Greenspan was on the thing. He should have gone in front of whenever he spoke in front of Congress and just went out and bought a bunch of puts and then just oh. During his testimony, had the market go down, he would have made a fortune. But so maybe it's again some of these guys, some of the trading they did were a little out there. But again, I don't want to get too sidetracked here. on that. I'm just saying that there's just some interesting things going on out there. But you go back to the if you take here, let's see if I can find. I'll pull it up here. 1 second. What I hear, I wrote in the mail report this weekend. Hold on. Let's go back to my thing here. But you see what's going on in Microsoft. Let me show this here. It'll only take a second. But Microsoft is starting to roll over. Okay, it's MACDs is seeing across, and the correlation between Apple and Microsoft has been very, very, very strong. And so if these two stocks start to roll over, we got a big problem. And let me just see if I can find it here.
Matt, really quick on that VIX trade before we move on. Would
Yeah.
that be the same as like I mean, let's say if you wanted to play that with shares, would you only be able to would you just buy the SQQQ or?
Yeah, you could do that. SQQQ, and they have there's the VIX, but the VIX has options. Some trading platforms don't trade it for some reason. I'm not really sure why, because they're very liquid. But there's also the VXX, which is a VIX ETN instead of the exchange traded fund. It's an exchange traded note. You can look at options on that, but you can buy the SQQQ, which is a 3 times inverse ETF on the QQQ. So that will be one to play, and yeah, so that would be a good one to play. But look at what's going on in Microsoft here. See this? How it's rolled over. Now again, it broke above its trend line. It broke above its 200-day moving average. Looks very, very good. But look at its RSI. I'm sorry, it's MACD. It's almost negative there. So if this thing breaks back below, if breaks back below this trend line, the 200-day moving average, if it breaks below 250, basically, and we got some problems. And let me just show you here. Okay, yeah, here we go. Here is Microsoft, and look how closely they've traded. Sometimes they've gotten away from each other, but each time they've fallen back, and we can see Microsoft has been getting hit. If it falls further, if you can see, if history is any guide, this is going to have to fall. Apple's going to have to fall more as well. Well, guess what? Microsoft and Apple make up over 24% of the QQQ. Okay, they go down, the QQQ is going down, and the SQQQ is going up. Okay, so that's something to watch. Keep a close eye on that. Tesla's also going to be one. Let's go back to my Bloomberg. Boom, 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 boom. Shoot. Okay, here it goes. TSLA. But again, this is the stuff we're constantly talking about in the chat room all the time. Tesla obviously had its great run. The stock has more than doubled. I mean, come on. I mean, what the news for Tesla hasn't been great. The stock's been great, no question. But there's a huge amount of short covering. But if anything, I mean, they've lowered prices. So you saw Munger. Mr. Munger was, the vice chair for Warren Buffett's right-hand man, Charlie Munger, who's brilliant billionaire. And what do they say here? Down here, again, the stock is coming off very oversold. And here they announced that they're cutting prices by 20%, right? And the stock is taken off. They've had negative news. Now, again, maybe all the negative news is priced in. We get this buy the news. Sometimes you sell the rumor, buy the news, and that's what happened. But the stock's doubled. I mean, this is not a meme stock that's only been around for a couple of years. I mean, this stock company's been around for, it's been a public company for more than 10 years. For Tesla, even as volatile as Tesla is, it doesn't rally 100% in a month, okay, or 5 weeks. That just doesn't happen very often. You can see how overbought it was. It's still holding up there, but it's coming up here to its 200-day moving average. Can it break it? I don't know. But if it starts getting lower too, again, that's another important stock. Another important stock in the QQQ. Its weighting is about 4%, but again, the combined, you have one is Microsoft, I think, is 12, and well, let's tell you right here. Let's go right here. QQQ equity, MEMB. Boom. Let's see right here. See this percent. It says here it is. Here you go, percent of net. So you can see Apple is 12.2%. Microsoft is basically 12%. So it's a little over 24%. Then you got Amazon, and Tesla is at the 4% range. Now Google's a little misleading because there's two classes of stocks, so it's over 7%. But again, so you look at those stocks, and Nvidia is another one that's been overbought lately. So you get these big cap tech names, which have been the main reason the market's been. It's not the only reason the market's rallied, but it's one of the only reasons it's been able to hold up. The whole market did a lot of good things in January, but it's gone sideways in February. It would have been a lot worse if Apple and Microsoft. Now we'll go back to one of the biggest compliments I've ever gotten was from a person, a member in the chat room, who sold all of his Microsoft stock at the end of 2021, and because I pointed out that the CEO Satya Nadella had sold 2/3 of his holdings, $374 million, and I said, guess what? People don't sell that kind of size unless they know the stocks. And this is not, he did nothing wrong. Nadella is a great CEO. He turned that company back around. They were having, I mean, they went through almost a full decade of a lost decade. He came in, completely turned the company around. The main reason why that stock is up because of the great job he did. But he also realized that all that liquidity had pushed the stock way to an expensive level. And people sell $20 million, $50 million worth of stock because they want to buy a house on the waterfront, whatever, I don't know. But you don't sell $375 million worth of your own company stock, 2/3 of your holdings, unless you think the stock's going to go down and stay down. Again, he had ridden plenty of 15 to 20% declines over the last decade, but he saw what the Fed was going to do. He saw the liquidity drain was going to do, and he got out. And I told people, get out of that stock. I said, this is a big warning flag for the whole market. And of course, it was spot on. And
Right.
one of the persons said they literally sold 100% of their Microsoft stock. Well, again, he's not. I'm not. He may be buying now. I don't think he is. We know about it, but he hasn't sold anymore. But the point is, see how important Microsoft is. As that thing rolls back over, you break below 250. Like I said, the QQQs are going to go down, and the SQQs are going to rally nicely. So keep a close eye on Microsoft next week.
Right. So Bigo asking, how do you sign up? Bigo, we put the link right now in the chat. It does have both choices, lifetime or annual. And again, this is until midnight. The only way to get this is if you call or email the contact we're putting in the chat. Matt, Mr. Matt, so you're looking at tech, right? Maybe there's a lot of people that want to start buying long-term, some stocks, but if there is short-term pain for tech, should you just wait? Or is there another sector that maybe is on the cusp of a turnaround or something like, like whenever you find like when you were bullish on the mining and the metals, when it was just, clobbered, forgotten, right?
Yeah, I think right now, I mean, it's the overall market. I think is very vulnerable right here, and the biggest thing is like what's down, what's beaten out. I mean, when I was pushing the gold stocks and such in a big way at one point last year when the market was getting hit, they were down and out. When I was pushing the energy stocks, which I'm I'm going to be a little bit careful here, but I do like a lot of these energy names because I do think that oil is going to hold up. Oh, let me take it back. Okay, there's another one here that we have had a lot of success with. Okay, but it's just relentless how it won't bounce back. But is these natural gas names? Natural gas just cannot get out of its own way. Look how down it just goes down and down and down and down and down and down. So UNG is a good one. That's just a ETF on the natural gas play. There's also one that we look at, oil, which is the 3-time leverage. We've made some nice money in those. I bought a very small amount of the calls a little while ago, and it didn't work. It was fine, but it was such a small amount of money I didn't mind because I was just getting my feet wet. But let's see how oversold this thing is. It's just flat on its back. Let's look at its weekly RSI chart. RSI chart. See how oversold that is. This at some point is going to bounce in a big way. So we're looking at this one. We're looking at Boyle, UNG, the natural gas area, and then there are stocks in the natural gas. And in fact, one of my picks recently, and we get stocks like this. Oops. Williams Companies, they have exposure. They're more on the infrastructure play. But that's one that again, it got hit on Friday because natural gas got, and oil got hit again. But Cheniere, I'm sorry, this is Chesapeake. Hold on a second. LNG, which stand, but they use the liquefied natural gas. But here's a stock again. It's been stuck in the sideways range, and it just can't seem to go. It's kind of neutral. But these are the types of stocks. If we can get any kind of a, I guess there's two things to be looking at. I'm looking at, can they get completely washed out? There's something I look at that tells me that it's really gotten washed out and presents a great opportunity to buy these names. And either you see that, or we finally see some sort of upward bias. So what I'm looking at right now, we're seeing a death cross, slight death cross in LNG. But if this thing can break above its 200-day moving average, you say, well, if it's going to break above its 200-day moving average at 152, why don't I buy it now at 147? Why? Because I'm not sure. It's risk management. I'm not sure that it's definitely going to happen. What I want to see is that it happen. And if it can, it's finally going to give me, more. More. So it's like, especially when you're buying early, you say, okay, well, geez, I'm going to buy the stock, and maybe the stock's going to 170. If I buy at 140 and it goes to 170, I'll make a lot more than if I wait till it gets to 152, right? But not so much in the options. You break in the options, they say it breaks here, and it gives you that confidence. Well, you can go ahead and buy the 160 calls, and you just buy them on a short-term basis. You've got the confidence, and when it really spikes higher, then you're going to make a couple of 100% on the play. So over a very short-term period of time, and it goes to 170, you'll actually do just fine. Just taking a guess. We're the guessing of making educated decisions, not wild guesses. And some of these things help us do it. So I'm looking, but I've been looking at it for a while, a couple of weeks now, and I haven't pulled the trigger, but I'm looking to pull the trigger. Stocks with exposure to natural gas.
Right. So a couple of things here, right? So on the global economy aspect and US economy also, like, it depends on China's growth, right? And their population was increasing for a long time, and I think it recently stopped increasing, right? So I don't know the numbers here in the US, but where do you see that population trade impacting housing, not in the US here?
Well, the biggest thing for housing is the population is an important play, but it's also the demographics, where you have this huge number of people who didn't need someplace to live. And we've heard about it for a long time, is because the supply demand thing is ridiculous. There's just no supply. And part of it has to do with not building enough houses, number one, but and part of that I'll go into that in a minute, but also has to do with the fact that so many people don't want to sell their homes because they have a 2% or 3% mortgage. And if they sell their home and buy another one, they're gonna have a 6% mortgage. And so they don't want to, obviously some people get moved, they get transferred and they have no choice. But some people are putting that off, and they just don't have enough supply out there. But you have the numbers, and I don't have the numbers at the tip of my fingers here, but the number of people in their 30s that are now, they have started families, and they've lived in these apartments, whether it be in cities or in towns. They live in a nice little apartment, but then suddenly they have a second child, and it's like, we need bigger space. And so we're still seeing that the demand is out there. And so I think it was that the population growth is one thing, but the demographics is still quite positive, I think, for the energy, for these stocks now, for the real estate, and for what we call the home builders. We do want to point out, however, on a short-term basis, this is the ITB ETF. See how it got overbought at the beginning of the month, starting to roll over a little bit. So let me just put this up here. Boom. See how I just saw a negative cross recently. But my point is that saying look for buy on weakness. Look to see how the 50. It hasn't even gotten down to the 50-day moving average, but you get down much lower from here. These home builders. Now look at these things. I mean, ITB. It's a DHI, but look at them. I mean, I like to the biggest ones, but we'll do DHI. Oops, DHI. Okay. Equity. Yes. Oh, look at this. Trading at 10 times forward earnings, 5 times stated earnings. Lennar, okay. See, 5 times earnings, 10 times forward earnings. These stocks, these stocks are still really cheap. And why? Because last year, when interest rates went up and the stocks did get hit, rightfully so, everybody was assuming we're going to get a repeat of what happened 15 years ago when the housing market just imploded. I said it. Believe me, I went positive. We bought. Well, I was telling people to buy the ITB. The options didn't trade very well there, but I was talking about ones in individual stocks like Lennar and DR Horton, et cetera. But my point was that we did not have the same froth that we had going into that pullback. We didn't have people buying it with zero money down. We didn't have people who couldn't afford the houses, buying their houses and just walking away from them. These were real buyers. People were buying homes to live in, not just to flip them. And so I knew that they were. But the thing is, the stocks were treated like they were going to go through the same kind of horror show that they saw through 15 years ago. That's why they got so cheap. It was ridiculous, but they're still cheap, even though they bounced back nicely. And so I guess my point is, we get any kind of further weakness again with interest rates moving up, we'll probably see them come down a little bit further. So I'm not backing up the truck here, and I'm even just kind of, if anything, now, because let's go back to the ITB and look at the. I remember I showed you the MACD chart was going to be had rolled over a little bit. So we want to be a little bit of careful here on a very short-term basis, but it's going to present an opportunity for, again, see how that MACD chart is going negative there. So we'll probably get it down more towards that 50-day moving average, that yellow line, before we get in there. But this is something we're going to be looking at very closely over the next, in the coming weeks, just not next week, I guess is my point. But so to answer your question, I tend to be long-winded, long answer to a short question is that, yes, I like the group. And I think on the demographic side, of population side, the housing stocks still have plenty to go. We just don't have enough housing. Forget about whether we have more immigrants come in, don't come in, whatever. We don't have enough housing, and we don't have it. And there's no prospects for that to change for quite some time.
So, and right now, how do you feel about the chip semiconductor sector as a whole?
I should have brought that up earlier. Thanks for asking about it, Rodrigo. There, obviously, it's an incredibly important thing. Now, like most of the marketplace, okay, and we've been talking about this the whole time. Sorry, get my face too close to that screen when I was typing stuff in. I got to get a more stable stand because I'm sure it makes things shake. I apologize, but let's go back to 2021. Excuse me. Okay. Actually zoom in. I went out too far. Let me zoom it in a little bit. There we go. Okay. Now we had that golden cross. That's real good, right? That's where the yellow line, that's the 50-day moving average. The purple line is the 200-day moving average. So we got that golden cross. Okay. Now I'm going to take that out, take those off. We've already established that. So let's take those off and let's put in the trend line. Okay, so you can see, no matter how you draw it, if you put it here, see how, now, let me just redraw it. Take me 2 seconds. Sorry about that. There we go. My finger's stuck to that thing, but look at this. Okay, and let me get rid of the old one that I drew poorly. There, okay, look at how this is so bullish, okay? But now I'm getting real worried. But here, what happened? See, trend line broke above the trend line, went back, retested the trend line slightly below it, and then rallied again, new high. That looks so good. However, look at how it's starting to curl over. And now, does that mean, on a long-term basis, this may just cool down and just go back and retest the trend line, or it may even fall down into here. But it goes all the way to that trend line. That is going to be one big pullback, right? Hold on. Remember I talked about that liquidity. Liquidity is being drained. That's still at 20. That would have to go all the way down to the trend line would be a 20% decline from here. And it doesn't even have to be that bad. But I'm concerned about it near term. Again, coming off that overbought condition. See, when it was overbought here, traded sideways for a while and then got hit hard. We're kind of doing the same thing. Trade sideways for a while. In this case, it got overbought and it traded sideways for a very short time and then got clobbered. But again, see how over here, same thing. Got way overbought, traded sideways for a while, then got slammed. We're doing the same thing here, and it's starting to curl over. See, each time, see when it traded, when it finally broke below that sideways range, it really got slammed. Okay. Sorry, I've got this thing that keeps, which has my own view here. Okay, well, anyway, but you see, same thing. Here it trades sideways, but when it finally broke behind that thing, it got hit hard. Same thing here, hit hard. We're getting very close to breaking below that line. Okay, if it does, there's a good chance this thing gets hit hard. Okay, now let's go to the MACD chart. Okay, so what happened here? Okay, there we go. So let's just pull up the MACD chart again. MACD. There we go. Negative cross, and it's not a small one. It's not a real compelling one. It's not a huge one yet, but it's definitely a noticeable one. And again, look what happened here. Negative cross, not much longer. Boom, slam, slam a damn a ding dong. Okay. Here, look at that big sell-off here. Look at that. Even that wasn't a major one. It still knocked it down. That may not look like much, but that decline after that decline was 18%. Now the cross took place afterwards. So I mean, it still took another 10%. Look at the cross here. Big sell-off. Here, big sell-off. This turns into, if we get any more down, it's not going to take much more downside at all for that to confirm that at least the short-term trend is changed lower. And boy, you know, TSM, Taiwan Semiconductor, which is by far the biggest, but by far the number one weighted stock in the SMH, which is the semiconductor chip stock ETF. I don't know if anybody saw that Warren Buffett just sold basically 89, 90% of his holdings. He said, boom, I'm out. What's going on there? I mean, it may not be a semiconductor thing. It may be something where he thinks that we're going to have an issue, a geopolitical issue with Taiwan and China and Taiwan. Well, that's still another reason. It's not going to be good for the stock market. Not going to be good for this group, right? But here, look at this one. This is the most important stock in the group. And let's get again rid of some of these lines. But again, this is what we love to talk about, especially. I'm surprised people don't ask more questions about individual stocks on the Tuesday calls. But I think they still do plenty. But here we go. Oh, not there yet. Whoop. Well, let's put the yellow line. So remember what I talked about, where whenever this thing finally breaks down after going sideways for a while, whenever these stocks, well, guess what? It's just about to break down. Okay. That's not good. It already has a negative MACD cross. Not there yet, but not good. Okay, let's get this green line. Draw this again. There we go. Now, again, my hand slipped, so that line didn't mean anything. But see how we're getting close to that line too, that trend line. So if we break below here and break below the trend line, this is going to be tough for the chip stocks. And again, when you get a guy like Warren Buffett, and I'll go back to the SMH, oops. SMH. Again, that is the SMH is the semiconductor ETF. That is 11%. Okay, 11% of the SMH is Taiwan Semiconductor. Okay, and one of the most best investors in the history of investing just dumped his position, and so that means now. So if this stock turns down, what about Nvidia? Okay, so it'd be 21% of the thing are these two stocks, Nvidia and Taiwan Semiconductor. Sorry. Remember, we made some money on. Okay, the stock's, but it's starting to curl over a little bit too, right? Right. See, from a very overbought situation. Let's get rid of some of these lines. I'm going to make this yellow just so it stands out a little bit more. I'll make it yellow. Bang. Again, it's too early to say throw, but see, it's breaking slightly below that. It's a very steep trend line, so we'd have to see more downside follow through, but as we do it again. Again, MACD, I'm going to let's see how this is starting to see a negative cross. So let's get rid of these lines again. And let's go. Bang. And let's go. What time is it? There. Okay. So we have a whoops, I cut that off too short, but it hasn't broken below that much. But you can still see how, no matter how you draw it, it's broken below that trend line, right? So there you go. We broke below that trend line and seeing a negative MACD cross. It's only a minor one again. So it could see how we had some minor ones here and it never really crossed. So we might get another head fake and we might keep going higher like we did here. But if this becomes a more compelling move, like it did here, you say, well, that's a little decline. That's not that much. I wouldn't make not that big a deal, right? Not a big, Oh, actually it was a 26% decline in the stock. Okay. Stock goes down 26%. Its options are going up. Its put options are going up hundreds of percent. Again, same thing here. Negative MACD cross, big sell off. Negative MACD cross, huge sell off. If this becomes a big cross, and again, you got Taiwan Semiconductor and
Right.
Taiwan and the other one going down at the same time, it's 22%. You got real problems.
Well, look, I mean, in the live room, you trade not just the TQQQ and the SQs, but you also trade individual stocks through the options as well, right? And again, basic calls, buying puts. There's no spreads, no condors, and you get clear entries and exits sent to your phone with the mobile alerts that we have. Those are the push notifications, Jeremy.
Right, exactly. So anyway, but yeah, this is what I'm, and obviously the chip stocks or the semiconductor stocks, they're the most important leadership group out there. Or certainly one of the, and it's not just been for a little while; it's been for several decades. And we saw in 2018 when the bear market, the market went down 19.8%. So technically, it wasn't a bear market, but it was. Now, in 2018, when the Fed was tightening the last time they tightened, but a couple of months in advance, the chip stocks, the SMH rolled over, and it just told us that the next rollover was coming. Now, it's not always a leading indicator. Sometimes it's a coincident indicator. They either both roll over together or both rally together. So it's a coincident indicator sometimes, but sometimes it's a leading indicator. It rolls over first or bounces back first. It's never a lagging indicator. Okay, so if you see that the stock market, that the S&P is getting out of whack with the chip stocks, follow the chip stocks. Right? Don't follow the S&P, and so that's why we keep keeping a very close eye on this. But anyway, we should probably wrap it up here. We've been going for about 2 hours, but it looks like that you don't have access.
Yeah, no, so basically right now, folks, Matt's going to show you guys here really quick. We'll try to see if we can get you guys into the live room, folks. But basically, Matt Maley, whenever you guys are trading with him, basically all you have to do is mirror his trades, right? So he'll say, this is where I'm getting in, it's a small position. This is where I'm starting to take profits, and pretty much do all of the risk management strategies. He does that for you. So Greg says, this was my first time here, just caught the last 30 minutes. I liked it. So for everybody else that popped in later, right? So basically Matt Maley is trading live. He's got a live trading room. He's there Monday to Friday, 8 a.m. till 5 p.m. Matt Maley is a chief market strategist. He's also been at Merrill Lynch as a director of trading. He managed Fidelity and BlackRock. He also was at Salomon Brothers. So a very extensive 40-year background. Great for someone to help you, to guide you, to handhold you. Wherever that is, that's only for the year. But you can send an email. That's what I would suggest. Send me an email. That's the only way to get the deal before it goes out of the checkout. But yeah, we do have a lot that we do in the room, not just options, but people ask Matt individually about stocks. So if you have a question about maybe some swing trades, and even if you're not able to buy the call or the put, you can still buy the ETF itself, right? The SQQQ itself, you can buy that. So Um,
It does look
Oliari,
like, I'm not being able to get into it either. I don't know what the,
no worries. Yeah, so but basically in the terminal that you have, right? You're looking at different stocks there, and I know that some people wanted to go over a few things, but Greg, we put the link in the chat. So that's going to be available until midnight. We're only doing this until midnight. If you want the deal, you have to call or email or use that checkout. But basically, Matt, in the meantime here, while you have your Bloomberg there up, what have you seen since, I mean, we launched this chat room in 2021, you and I, and it's been great, the progress to see the people, how they've improved, right, on different strategies that you help them with. What do you think are the main things that new traders get out of this chat room and trading with you, a 40-year Wall Street veteran?
I think the biggest thing is that, again, and I talked about this a little bit earlier, is that the best traders on Wall Street, the professional players, the guys who whether it be the best hedge funds or at the Goldman Sachs of the world or wherever, Morgan Stanley, these other, this what we call the sell side firms, the brokerage firms, and then you get the traders at these big hedge funds or even smaller hedge funds. Some of these smaller hedge funds are really brilliant. They just want to remain strong, want to remain small so they can stay nimble. But they all have several traders, and they're talking to each other all day long. Not only that, they're talking to traders from the brokerage firms. If you have somebody who's helping you with your long-term investments, and you have a broker, you usually have one, right? And they help you through that thing. Maybe you have a second one, but these people, they're considered institutions. They do business with everybody. They don't just have one broker. They have many brokers and dozens of brokers. And those dozens of brokers are calling them all day long, pointing out stuff to them. Hey, Apple's getting hit for hey, there's a rumor about this. Hey, the stock's getting way oversold. Why don't you buy some here? They're talking about every little thing that's going on. Hey, did you hear that Intel got downgraded today? I mean, they're not learning that at 10 o'clock. They know it at 8 o'clock in the morning, right? These are the types of things that allow people to be able to trade in a successful manner. So if they don't trade by themselves, how in the world is the rest of us going to be able to trade if they're trying to do it by themselves? And so this chat room is great because it's not just me providing whether it be insights or breaking news or things. It's so many different people that are sharing their thoughts. Trading alone is all but impossible. The pros don't do it. Again, why should you? So that's the number one thing. The other thing, of course, is that in our at least my motto is there's no such thing as a stupid question. There's people, there are things that you could be the smartest person in the world, but until you've actually been told something, you can't. It's like, you could be the smartest person about sports in the world, but if you don't know anything about cricket and you go to another country, you don't know the rules, and you got to learn them. Somebody's got to teach them to you. And so, geez, let me ask a stupid question. What is it? In baseball, I don't know cricket, but let's say somebody here and said, what's a double play? And you kind of laugh and say, well, I've known what a double play was since I was 3 years old. Well, that's fine. They came from another country. That's what some people are in the stock market. They're like, well, this doesn't make any sense to me. Well, I know it doesn't make sense, but in the stock market, this is how it works. So these types of things that aren't always intuitive, and in some cases don't make sense at all, but it is the way the market works. That whole thing I was talking earlier, how higher oil prices, higher fuel prices aren't necessarily a negative thing for airline stocks, even though it would make total sense that they would be. And so those are things that we try to focus on: teaching, working together, and especially in these volatile times. Again, we have a situation that's so unique in the marketplace. We never had the tools to have this for years and years and years. We didn't have options. There are only quarterly options. So if you wanted to make a bet on Apple Computer, you'd have to go out several weeks. That time value gets expensive. You want to make a bet on Apple Computer, all the major stocks have weekly options. The index stocks, the indexes, the SPYs, the QQQs, they have daily options, okay? And then the TQQQs, they have weekly options as well. And we have options on, like I said, on commodities, on whatever it happens to be, and they're liquid. And in the old days, first of all, you didn't, yeah, there was no such things as these inverse ETFs, et cetera. You had fewer tools. Only the big institutions have those tools. We have them now. We can take advantage of them now. You don't have to rely on a bull market to make money. You can make money on the downside, especially in the trading area. We're going to have a lot more volatility this year. Again, we have interest rates that are now moving back up again. Investors are starting to finally believe the Fed when the Fed says that they're going to keep rates higher for longer. Earnings are coming down. Higher yields, higher interest rates, and lower earnings are a bad combination for the stock market. And so we're going to have more volatility. Let's take advantage of it in both directions. So I hope, you know, those who joined today, thank you. We'll look forward to seeing you in the chat room next week. And it's an unbelievable time because the volatility is there to make money. It's if you have the time and the inclination to take advantage of it, it's going to be an unbelievable situation. Again, this guy 50 cents is making a big bet. The market's going to go down and the VIX volatility is going to go up. We want to go for the ride along with them, and that's what we're going to try to do. But thanks again for joining us today, and good luck with everything. I'm sorry we couldn't show the
No, it's all good, man. Here, it's all good, man. And folks, again, this is last call here, folks. Matt Maley, he's going to be in the live room Monday to Friday.
Not this Monday because the market's closed tomorrow, but just
okay, yeah. Well, Tuesday, everybody that joins here is going to start with a kick on Tuesday, right? For Matt's power session.
Absolutely.
And, right. So that's where you do your trade adjustments. You update the portfolio. You talk about the markets. You answer questions. You do education. I mean, just that by itself, an hour with a chief market strategist. You know, on top of the trades, on top of the email trade alerts, the mentorship, the guidance that you're providing there, Matt. So it's great. Big shout out to you, man. Thanks a lot for helping, right? All of the retail traders out there.
Absolutely. I enjoy it and passionate about it. And good luck to everybody for the rest of this year. I think it's going to be a great one. And thank you, Rodrigo. We'll talk to you in the chat room.
Absolutely. Absolutely. Matt Maley, thanks a lot. Appreciate you here, everybody. Matt Maley, Chief Market Strategist at Miller Tabak. A lot of you guys already know him. You've seen him on CNBC or Bloomberg, anywhere out there. So big shout out to him. And all right. All right, that's the air horn, folks. So everybody here that signed up live or while we're live, you'll get a special treat. But just a quick reminder, this is only going to be there till midnight. You'll basically have the annual and lifetime options just as we have them until midnight. For everybody that's new here, you do know where to send out any questions that you have. So I see a lot of questions here about the room. Yes, you do have mobile push notifications. All you have to do is download the Benzinga app on your phone, log in with the credentials, and you will get the push notifications whenever Matt is doing an entry, an exit, whenever he's trimming or adding to a position. You will get every single notification of the contract he's buying, the expiration, strike price, every single thing. And the link is there, Marcus. We posted it in the chat. So yes, Monday to Friday, 8 a.m. till 5 p.m. live with a chief market strategist. Okay, no, not an assistant, not some self-taught person or YouTube guru, right? We're talking about a real chief market strategist, right? So it's great that you guys have this access as a retail trader. This is something that you can actually depend on, right? Something that you can rely on, right? He's going to be there the whole day. You can ask as many questions. You're going to get every single trade from him, the email trade alerts as well. So big shout out to all you guys. Thanks for being here on a Sunday. Just remember, this expires at midnight. Okay, so make sure to send an email before this whole thing goes away. So big shout out to Matt Maley. Big shout out to all you guys. Happy Sunday. We'll see you guys in the chat room tomorrow. Well, not tomorrow, on Tuesday, right? See you guys on Tuesday.